Scared money never wins. Stay tuned, traders. We're going to talk about that next. G'day traders, Stacey Burke from Stacey Burke Trading. Today we're going to be talking about scared money never wins. Now, if you have experienced going through drawdowns or through choppy markets or through a losing streak in your trading, you'll be able to relate to what I'm going to talk to today. So, scared money never wins. When we get into some winning trades, we're profitable, we can tend to get maybe overconfident, over aggressive with our trade size, maybe veer outside of our trading plan a little bit because we're confident in our knowledge about the markets and reading the charts, and we may jump into some trades that aren't necessarily part of our trading plan. All of these ultimately can lead you down a path that can cause you to come unstuck. But when you do go through a losing streak, even when you're executing your trading plan properly, your position sizing, your money management, your capital preservation, all those things that are in your best playbook trade setups still will challenge your thinking. Now, Peter Brandt talked about going through a 14-month drawdown somewhere around that time frame where he started to question whether or not his classical charting that he'd been using for 40 years was possibly not going to get him through the next phase of the markets, and he was looking at some different things. It really challenged his thinking. And you know, one of the things that happens to all of us is that we get fearful of taking the next trade because we think it's going to be a loser anyways, so we're afraid to pull the trigger. And the other side of the coin is that we can become too aggressive and just throw hope to abandonment and just be wanting to jump back into the market because our emotions take over. And when we're going through those challenges, we tend to want to get even or get back to where we were in terms of making the money back. We get angry, we want revenge, or we get vengeful against the market, we get frustrated, we become impatient, and we lose focus because we want to have instant gratification often from the markets. This is where it's critical to be able to go back, review your trading plan, have something to anchor you back to snap you out of that thought process, and review your best playbook trade setups. Now, I talked in one of my recent videos about trying to keep your losses consistent, so the 1R factor. Now, what's important about going through a drawdown or your losing streak or choppy markets or poor trade performance, whatever you want to call it, is that if you can keep your losses small or consistent, you can always bounce back from a 1R loss. Now, as I've pushed size on some of my end-of-day trading and it was teaching me the market is a continuous feedback loop of learning, you know, I was taking larger losses than normal, but what I was able to confidently feel good about in terms of moving forward was that my losses were 1R. You know, and I talk about, you know, on the hourly charts, I know that I'm going to have a maximum 20 to 25 pip stop loss at the very most. And on the end of day, probably no more than 50 pips. And the reason why that is that most of my trades are based on momentum. So I know that when I get into the market, there's usually very little stress against my position. And that includes the end of day. So there's a stretch factor in there that if I go in at market or I have a limit order, that potentially I may experience some heat against my position. But through my back testing, I've sort of been able to extrapolate that on the end of the day, it's usually never going to be more than 50 if I'm right, or it's a weak trade, or I'm wrong, and no more than 20 to 25 tops on the hourly system. Now, what's critical about that is that I'm trying to tighten up losing as little as possible on my losing trades. And on my winning trades, now I'm trying to work out how I can extract the maximum amount out of that trend or that position, and again, having an asymmetrical risk reward. So if you're taking that 1R loss, I want to know on average that I'm getting, you know, 2.7 or 4.2R in return as my positive expectancy, somewhere well above that 1R. So if I take that loss and I know I'm getting 4R on my trades when they go, I can take 2 or 3 losses and still feel comfortable that one trade's going to wipe that out. And if I get into a really strongly trending market, it may be a 10R trade. So the question that I challenge you to ask when you're going through a challenging patch of your trading and you're frustrated, you're angry, whatever those emotions are, try to neutralize that. Have a little routine to bring yourself back to center. But you want to question, is this trade worth the risk that I'm taking on it? So if you're taking a 20, 25, 50 pip stop, whatever it is on your trading, 10 pip, 12 pip, but you've got some level of resistance or support that's going to challenge that trade that's only 10 or 12 or 15 pips away, these are the types of scenarios that you need to sort of present to yourself in terms of the risk-reward setup. So again, is that trade worth the risk you're going to take on? Is every movement up and down of the market causing you to break out in hives and sweat for every pip of movement? If so, possibly reduce down your size. Now, at some points, I've been so frustrated in my trading, I've gone back to micro lots and just focused purely on the process for 10 trades of executing my trading plan and getting myself anchored back onto my system. And what's great about that is that then you can come back and you're not attached to any one particular trade setup, but also you can get back to where you're seeing that positive expectancy and getting your confidence and reinforcing the patience, the discipline, the confidence, and the winning mindset that you need to be able to keep executing your trading system flawlessly and focus on preserving your capital, executing your trading plan, and staying in the game. So don't risk everything on one trade. If you haven't done so, go to my homepage, get my 7-step daily routine for high-performance traders. Craft a vision of the trader that you want to become. Create the daily disciplines and the habits that are congruent with that vision statement. Work on your mindset daily. Set goals. Journal your trades. Accelerate your learning. All the things that are going to help you get better and stay in a direction of constant progress. So hopefully you got some value from today's video, traders. Just remember, scared money never wins. Have a little routine to anchor yourself and get yourself back to focusing on your trading plan if you're finding that you're getting emotional. And remember, ask yourself, is this trade worth the risk that I'm taking on it? And don't risk everything on one trade. Stay disciplined, stay focused. Your best trading is still yet to come, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.